Question 1. Which of the following factors is least likely to be considered when underwriting a term life insurance policy? A. The applicant's family medical history. B. The applicant's occupation. C. The applicant's hobbies and lifestyle choices. D. The applicant's preferred premium payment method. Answer: D. The applicant's preferred premium payment method. Explanation: when underwriting a term life insurance policy, insurers evaluate risk by assessing various factors such as family medical history, A, occupation, B, and lifestyle choices, C, as these elements significantly influence the risk of mortality. Preferred premium payment methods, D, while relevant for customer service, do not impact the risk assessment directly and are thus the least likely consideration in the underwriting process. Question 2. In the context of term life insurance, what is the primary purpose of a grace period? A. To allow the insured to change beneficiaries without penalties. B. To provide a time frame for premium payment without policy lapse. C. To enable the insurer to contest a claim after the insured's death. D. To automatically convert the policy to a permanent plan if not renewed. Answer: B. To provide a time frame for premium payment without policy lapse. Explanation: a grace period in a term life insurance policy refers to the time allowed for the policyholder to make premium payments without losing coverage. Typically, this period lasts 30 days after the due date of a premium. Options could changing beneficiaries, C, contesting claims, and D, automatic conversion do not relate to the purpose of the grace period. Understanding the grace period is critical for maintaining coverage and ensuring that policyholders are protected even if they miss a payment deadline. Question 3, scenario-based. Mr. Smith is a 45-year-old non-smoker looking to purchase a term life insurance policy to cover his mortgage and provide for his children in the event of his death. He is considering two options: a 20-year level term policy with a face value of $500,000 and a 30-year decreasing term policy with an initial face value of $500,000 that decreases by 5% annually. Mr. Smith is concerned about his premium affordability over the years. What should Mr. Smith consider most when deciding between these two policy types? A. The total premium cost over the term of the policy. B. The death benefit amount remaining at the end of the term. C. The purpose of the coverage and financial needs of his family. D. The insurer's reputation and claim settlement ratio. Answer: C. The purpose of the coverage and financial needs of his family. Explanation: while total premium cost A and death benefit remaining B are important considerations, the most critical factor for Mr. Smith is the purpose of the coverage and the financial needs of his family. C. A 20-year level term policy ensures that the death benefit remains constant, which is beneficial for his family's long-term financial security. In contrast, the decreasing term policy 30-year may not provide sufficient coverage in later years as the face value decreases, which might not align with his family's needs, especially if they rely on that coverage. Insurer reputation D is also significant, but Mr. Smith should prioritize his family's financial protection when making this decision. Understanding the implications of policy types ensures that Mr. Smith makes a choice that aligns with his financial objectives. Question 4. What is the primary difference between a level term life insurance policy and a decreasing term life insurance policy? A. The premiums for level term policies are higher than for decreasing term policies. B. The death benefit remains the same for level term policies, but decreases over time for decreasing term policies. C. Level term policies provide coverage for a longer period than decreasing term policies. D. Decreasing term policies are convertible to whole life policies, while level term policies are not. Answer: B. The death benefit remains the same for level term policies, but decreases over time for decreasing term policies. Explanation: in a level term life insurance policy, the death benefit remains constant throughout the term of the policy, B, providing a fixed amount of coverage. In contrast, a decreasing term policy has a death benefit that reduces over the term, typically in line with a liability such as a mortgage. Option A may be true in some cases, but not universally. Option C is incorrect, as both can cover the same duration, and option D is misleading, as not all term policies include conversion options. Question 5. Which of the following statements regarding the contestable period in a life insurance policy is true? A. The contestable period lasts for 10 years after the policy is issued. B. Insurers can contest a claim during the contestable period based on misrepresentation. C. After the contestable period, all claims must be paid regardless of circumstances. D. The contestable period applies only to term life insurance policies. Answer: B. Insurers can contest a claim during the contestable period based on misrepresentation. Explanation: the contestable period is typically 2 years from the date the policy is issued, during which the insurer can challenge a claim if they find misrepresentation or fraud. B. After this period, claims cannot be contested on the basis of misstatements made at the time of application, but they can still be denied for non-payment of premiums or other contractual breaches. Option is incorrect regarding the duration, while option C oversimplifies the terms of claims, and option D is misleading as the contestable period applies to both term and permanent policies. Question 6. Which factor is least likely to influence the underwriting decision for a term life insurance policy? A. The applicant's occupation. B. The applicant's geographic location. C. The applicant's favorite hobbies. D. The applicant's medical history. Answer: C. The applicant's favorite hobbies. Explanation: underwriting decisions are primarily influenced by factors that directly affect risk assessment, such as occupation A, geographic location B, and medical history D, while certain hobbies may be relevant E. G. Skydiving. The general statement regarding favorite hobbies C is too vague and is the least likely to significantly impact the underwriting process. Underwriters focus on clear risk factors that can affect mortality rather than personal interests that do not present significant risk. Question 7. If a term life insurance policyholder stops making premium payments, what is the most likely outcome if they do not utilize their grace period? A. The policy will automatically convert to a whole life policy. B. The policy will lapse and the insured will lose coverage. C. The policy will remain active for a period of time without payment. D. The insurer will pay the death benefit to the beneficiaries. Answer: B. The policy will lapse and the insured will lose coverage. Explanation: if a policyholder fails to make premium payments and does not take advantage of the grace period, the policy will lapse, B, resulting in the loss of coverage. The grace period is a provision that allows a short period for payment, but if payment is not made within that time, the insurer has no obligation to keep the policy active. Option A is incorrect, as a term policy does not convert automatically. Option C is misleading because coverage is not maintained without payment, and option D is false as the insurer does not pay out death benefits if the policy has lapsed. Question 8. What is the primary advantage of a convertible term life insurance policy? A. It offers a higher death benefit than other types of policies. B. It allows the policyholder to convert to permanent insurance without medical underwriting. C. It guarantees lower premiums than standard term policies. D. It provides lifetime coverage without any renewal process. Answer: B. It allows the policyholder to convert to permanent insurance without medical underwriting. Explanation: the key benefit of a convertible term life insurance policy B is that it allows the policyholder to convert to a permanent life insurance policy without undergoing additional medical underwriting, typically at any point during the term. This is particularly advantageous for individuals whose health may change over time. Option is incorrect because the death benefit is not inherently higher than that of standard term policies. Option C is misleading as premiums vary by policy, and option D is incorrect as convertible policies do not eliminate the renewal process. They allow for a change of policy type. Question 9. Mr. Johnson, a 50-year-old male with a history of hypertension, applies for a 20-year level term life insurance policy. During the underwriting process, he discloses that he has been prescribed medication for his condition. What is the most likely outcome of his application? A. He will be automatically declined due to his medical history. B. He may be classified as a standard or substandard risk depending on other factors. C. He will be offered a higher premium based on his condition. D. His application will be placed on hold pending further medical tests. Answer: B. He may be classified as a standard or substandard risk depending on other factors. Explanation: in Mr. Johnson's case, disclosing hypertension may lead to his application being classified as a standard or substandard risk. B. Based on the insurer's underwriting guidelines, insurers will consider the severity of his condition, his treatment plan, and any other risk factors before making a final decision. Option A is incorrect as not all applicants with health issues are automatically declined. Option C may occur but isn't guaranteed, and option D is less likely unless further information is required, which is not typical for straightforward cases like this one. Question 10. Which of the following riders allows the policyholder to receive part of the death benefit while still alive if diagnosed with a terminal illness? A. Waiver of premium rider. B. Accidental death benefit rider. C. Accelerated death benefit rider. D. Child term rider. Answer: C. Accelerated Death Benefit Rider. Explanation: the Accelerated Death Benefit Rider (C) enables policyholders diagnosed with a terminal illness to access a portion of the death benefit while still alive, providing financial support during critical times. The waiver of premium rider A waives premiums under specific circumstances but does not provide cash benefits. The Accidental Death Benefit Rider B offers additional coverage if death occurs due to an accident, and the Child Term Rider D provides coverage for dependent children but does not relate to terminal illness benefits. Understanding these riders allows clients to tailor policies to their specific needs and circumstances. Question 11. Which of the following statements is true regarding the grace period in a term life insurance policy? A. It is a fixed 30-day period in which the policyholder must make premium payments. B. During the grace period, coverage remains active even if the premium is unpaid. C. The grace period can be waived by the insurer at any time. D. If the policyholder dies during the grace period, the insurer pays the full death benefit minus any overdue premiums. Answer: D. If the policyholder dies during the grace period, the insurer pays the full death benefit minus any overdue premiums. Explanation: the grace period is typically a 30-day time frame during which a policyholder can make a premium payment without losing coverage. B. If the insured passes away during this period, the insurer will pay the full death benefit but will deduct any outstanding premiums. D. Option is inaccurate as the grace period can vary by state and policy. Option C is misleading because the grace period is a contractual obligation that cannot be waived unilaterally by the insurer. Question 12. What is the primary purpose of conducting medical underwriting in the life insurance application process? A. To determine the applicant's eligibility for a policy. B. To assess the applicant's lifestyle choices. C. To establish the appropriate premium amount based on risk factors. D. To evaluate the applicant's financial situation. Answer: C. To establish the appropriate premium amount based on risk factors. Explanation: medical underwriting aims primarily to assess the applicant's health and determine the associated risk which directly influences the premium amount. C. While eligibility A is part of the process, the main focus is on calculating the premium. Option B is less comprehensive as lifestyle choices are just one factor considered. Option D is misleading as financial underwriting is a separate process. Question 13. Under Oklahoma law, which of the following is not a requirement for a life insurance policy to be considered valid? A. The policy must be issued by a licensed insurer. B. The policy must contain a grace period provision. C. The policyholder must have insurable interest in the insured. D. The policy must be delivered to the policyholder within a specified time frame. Answer: B. The policy must contain a grace period provision. Explanation: while a grace period is common, it is not a mandatory requirement for a life insurance policy to be valid. B. The other options are essential. Policies must be issued by licensed insurers. A. The policyholder must have insurable interest. C. And timely delivery is important for the policy's effectiveness. D. Failure to meet these requirements could invalidate the policy. Question 14. Which type of term life insurance would be most appropriate for a policyholder looking to cover a specific financial obligation, such as a mortgage that decreases over time? A. Level term insurance. B. Renewable term insurance. C. Decreasing term insurance. D. Increasing term insurance. Answer: C. Decreasing term insurance. Explanation: decreasing term insurance (C) is designed specifically to align with financial obligations that diminish over time, like a mortgage. In contrast, level term insurance (A) maintains a consistent death benefit, while renewable term (B) allows for policy renewal without evidence of insurability, and increasing term insurance (D) increases the death benefit, making it unsuitable for covering decreasing liabilities. Question 15. Which of the following factors is least likely to influence the premium rate for a term life insurance policy? A. The insured's age at application. B. The insured's occupation. C. The insured's personal hobbies. D. The insured's preferred payment method. Answer: D. The insured's preferred payment method. Explanation: the preferred payment method D is generally relevant to premium determination, while age A, occupation B, and hobbies C directly impact risk assessment. Older applicants tend to have higher premiums due to increased mortality risk. Certain occupations may present higher risks, e.g., hazardous jobs, and risky hobbies can increase the likelihood of claims, thus affecting premium rates. Question 16. Mr. Smith is considering purchasing a 15-year level term life insurance policy. Which of the following statements accurately describes a characteristic of this type of policy? A. The premiums will decrease each year for 15 years. B. The death benefit will increase annually over the term. C. The policyholder can convert to a permanent policy without evidence of insurability. D. The premiums will remain constant for the entire term. Answer D. The premiums will remain constant for the entire term. Explanation: a 15-year level term policy means that the premiums D and the death benefit will remain constant throughout the policy's term. Option is incorrect, as premiums do not decrease. Option B is also wrong, since the death benefit is level, and option C is only true if the policy specifically includes a conversion option. Question 17. When filing a claim under a term life insurance policy, which of the following is the insurer not required to provide to the policy beneficiary? A. A written explanation for the claim denial, if applicable. B. Access to the original policy document. C. Timely payment of the death benefit if the claim is valid. D. The option to appeal a denied claim. Answer B. Access to the original policy document. Explanation: while insurers must provide a written explanation for any denied claims, they pay valid claims promptly. C. And allow beneficiaries to appeal denied claims. D. There is no requirement for them to provide access to the original policy document. B. Beneficiaries should already have the policy details or can request them from the policyholder's files. Question 18. Which of the following is a characteristic of the waiver of premium rider in a life insurance policy? A. It provides coverage for the insured spouse at no additional cost. B. It waives premium payments if the insured becomes disabled. C. It guarantees the insured can convert their term policy to a permanent policy. D. It allows the insured to receive a portion of the death benefit while alive. Answer B. It waives premium payments if the insured becomes disabled. Explanation: the waiver of premium rider B ensures that if the insured becomes totally disabled, premium payments are waived while they are unable to work, thus maintaining coverage without financial strain. Option is incorrect, that the rider does not automatically cover spouses. Option C refers to conversion rights rather than premium waivers, and option D describes the accelerated death benefit rider instead. Question 19. What is a significant benefit of including a rider for an accelerated death benefit in a term life insurance policy? A. It increases the death benefit paid out to beneficiaries. B. It provides access to the death benefit in case of terminal illness. C. It allows for low premiums compared to standard term policies. D. It provides coverage for children without additional premiums. Answer B. It provides access to the death benefit in case of terminal illness. Explanation: the accelerated death benefit rider B allows the insured to receive a portion of the death benefit while still alive if diagnosed with a terminal illness, providing crucial financial support during a difficult time. Option A is misleading because it does not increase the death benefit. Instead, it allows early access. Option C is incorrect, as this rider typically does not influence premium costs directly, and option D pertains to the child term rider, not the accelerated death benefit rider. Question 20. Which of the following statements regarding the tax implications of term life insurance is correct? A. Death benefits paid out to beneficiaries are subject to income tax. B. Premiums paid for term life insurance are tax deductible. C. The cash value of a term life insurance policy accumulates tax deferred. D. The death benefit is generally received tax-free by the beneficiaries. Answer D. The death benefit is generally received tax-free by the beneficiaries. Explanation: the death benefit paid to beneficiaries D is typically received income tax-free, providing financial support without tax burdens. Option is incorrect because death benefits are not subject to income tax. Option B is misleading, as premiums for personal life insurance are not tax deductible, and option C is inaccurate because term life insurance policies do not accumulate cash value, a feature associated with permanent life insurance. Question 21. In a term life insurance policy, what does the term convertibility refer to? A. The policyholder's ability to change the beneficiary designation. B. The option to change the policy's face amount. C. The ability to switch from a term policy to a permanent policy without additional underwriting. D. The right to transfer the policy ownership to another individual. Answer: C. The ability to switch from a term policy to a permanent policy without additional underwriting. Explanation: convertibility. C. Allows policyholders to convert their term life insurance policy to a permanent policy without undergoing new medical underwriting, which is beneficial if their health deteriorates. Options A and B relate to features that do not define convertibility, while option D refers to ownership transfer rather than policy conversion. Question 22. Which of the following is true regarding the underwriting process for term life insurance? A. All applicants must undergo a medical examination regardless of age. B. Underwriting decisions are based solely on the applicant's age. C. An applicant's lifestyle choices can impact the underwriting decision. D. Premium rates are fixed and do not vary based on underwriting results. Answer: C. An applicant's lifestyle choices can impact the underwriting decision. Explanation: lifestyle choices, C, such as smoking or high-risk hobbies, can significantly influence the underwriting decision and the premium rates offered. Option is incorrect, as not all applicants are required to undergo medical exams, especially for lower coverage amounts. Option B is misleading. While age is important, it is one of many factors. Option D is false because underwriting results can affect premium rates. Question 23. What is the primary difference between a renewable term life insurance policy and a level term life insurance policy? A. Renewable policies provide coverage for the insured's entire life. B. Level term policies allow for premiums to decrease over time. C. Renewable policies can be extended at the end of the term without reapplying. D. Level term policies automatically convert to permanent policies. Answer: C. Renewable policies can be extended at the end of the term without reapplying. Explanation: renewable term life insurance, C, allows the insured to renew their policy at the end of the term without undergoing additional underwriting, although premiums may increase. Option is incorrect, as renewable policies do not provide lifetime coverage. Option B is false because level term policies maintain constant premiums, or option D is inaccurate, as level term policies do not automatically convert. Question 24. What happens if an insured person commits suicide within the first 2 years of a term life insurance policy? A. The policy pays the full death benefit. B. The policy pays only the premiums paid up to that point. C. The policy is voided entirely. D. The claim is investigated, and if found intentional, the claim is denied. Answer: B. The policy pays only the premiums paid up to that point. Explanation: many life insurance policies include a suicide clause, B, that stipulates that if the insured commits suicide within the first 2 years, the insurer will only return the premiums paid rather than paying the full death benefit. Options A, C, and D misrepresent the typical contractual obligations of life insurance policies regarding suicide within this period. Question 25. Which of the following statements best describes the role of a beneficiary in a term life insurance policy? A. The beneficiary is responsible for paying the premiums. B. The beneficiary is the individual who receives the death benefit upon the insured's death. C. The beneficiary must be a family member of the insured. D. The beneficiary has the right to alter the terms of the policy. Answer: B. The beneficiary is the individual who receives the death benefit upon the insured's death. Explanation: the beneficiary, B, is designated in the policy to receive the death benefit when the insured passes away. Options A and D are incorrect, as beneficiaries are not responsible for premiums or policy terms. Option C is misleading, and while many beneficiaries are family members, they do not have to be, as policyholders can name anyone. Question 26. A policyholder has a term life insurance policy with a face value of $500,000. If the policyholder dies after 10 years and has paid all premiums, what amount will the beneficiaries receive? A. $0. B. $500,000 minus any unpaid premiums. C. $500,000 plus interest accrued. D. $500,000. Answer: D. $500,000. Explanation: if the policyholder dies after 10 years while the policy is in force, the beneficiaries will receive the full face value of $500,000. D, assuming no exclusions apply. Option is incorrect, as the policy is valid. Option B is misleading because unpaid premiums do not affect the death benefit after the grace period, and option C is false, as term policies do not accumulate cash value or interest. Question 27. What is the main disadvantage of term life insurance compared to permanent life insurance? A. Term life insurance typically has low premiums. B. Term life insurance does not build cash value over time. C. Term life insurance is easier to obtain. D. Term life insurance provides a death benefit only if the insured dies within the term. Answer: B. Term life insurance does not build cash value over time. Explanation: the primary disadvantage B of term life insurance is that it does not accumulate cash value, which permanent life insurance policies do. While option is correct that term policies generally have lower premiums, this is not a disadvantage. Option C is also accurate. Term life insurance is typically easier to obtain. Option D is true but does not reflect a comparative disadvantage. Question 20. Which of the following options allows a policyholder to add coverage for their children under a term life insurance policy? A. Waiver of premium rider. B. Child term rider. C. Accelerated death benefit rider. D. Conversion rider. Answer: B. Child term rider. Explanation: a child term rider B allows policyholders to add coverage for their children at a lower cost. The waiver of premium rider A is designed to waive premiums during disability, while the accelerated death benefit rider C provides access to death benefits under certain conditions, and the conversion rider D allows converting term insurance to permanent insurance. Question 29. In Oklahoma, which of the following must be included in a term life insurance policy to comply with state regulations? A. A clause stating that the policy cannot be cancelled within the first year. B. An explanation of the right to examine the policy. C. A provision allowing premiums to be increased after the policy is issued. D. A requirement for the insured to undergo a medical exam every year. Answer: B. An explanation of the right to examine the policy. Explanation: Oklahoma regulations require B. An explanation of the policyholder's right to examine the policy, often referred to as the free look provision, allowing them to cancel for a full refund within a specified time. Options A and D are incorrect as there are no such requirements. Option C is misleading since premium increases are typically defined in the policy. Question 30. Mr. Jones is a 45-year-old smoker applying for a 20-year term life insurance policy. Which of the following factors is most likely to affect his premium? A is marital status. B is smoking habits. C is educational background. D is choice of beneficiaries. Answer: B is smoking habits. Explanation: Mr. Jones's smoking habits B will significantly affect his premium due to the increased health risks associated with smoking, often leading to higher rates. Option A, marital status, may have some impact, but is less significant. And option C, educational background, is usually not a primary factor. And option D, choice of beneficiaries, has no impact on premium rates.